Most people have no idea what's coming. They've spent the last 15 years enjoying what they thought was prosperity, but it wasn't real. It was borrowed and printed. What we are witnessing now is not just a crisis. It is the end of a monetary era. And I'm not saying that to scare you. I'm saying it because I've seen this system from the inside, deep inside the Swiss financial world. My name is Enzo Caputo. I'm a Swiss lawyer and the founder of Caputo and Partners, a boutique law firm in Zurich specialized in wealth protection, Swiss private banking, and international banking law. I served as compliance officer for a major Swiss bank and as the former CEO of the Swiss Association of Asset Managers. For over 30 years, I've helped high net worth individuals and entrepreneurs legally protect their assets across borders using Swiss precision, international law, and a deep understanding of how this financial system really works. In this video, I'm going to show you why the global debt bubble cannot be saved, why negative interest rates are financial suicide for savers, why your pension may not pay out, and why gold will outlive every fiat currency on earth. This isn't theory, it's mathematics, and it's history. Let's begin. There was a time when saving was noble, when banks rewarded you for delaying consumption. That time is over. Today, central banks are paying people to borrow money. In Denmark, you can get a negative interest mortgage. That means you borrow money from a bank and they pay you. In Switzerland, you can lock in 10-year mortgages at 1%. You buy a 1 million franc property and your annual interest cost is just 10,000 francs. But if you rent the same property, you pay 30,000 or more. It's completely upside down, and yet no one questions it. Why? Because we've reached the final stage of this monetary experiment. The system no longer rewards discipline. It punishes it. Savers lose, debtors win. That's why people aren't saving anymore. They're maxing out credit cards, leasing luxury cars, borrowing for holidays, and hoping that asset prices keep going up. But hope is not a strategy. When Ronald Reagan took office in 1981, the US federal debt was $1 trillion. Today, it's over 35 trillion. That's not a typo. The debt went up 35 times, but tax revenues only grew 6 times. That gap, it's unpayable, unserviceable, and it's growing. Everyone talks about inflation, but the real threat is confidence. Fiat money only works as long as people believe in it. And right now, governments are doing everything possible to destroy that belief. They print money with no backing. They suppress interest rates. They buy their own bonds. And people call that policy. I call it fraud. We are no longer in a free market. We are in a centrally managed illusion. One day, a child will shout, "The emperor has no clothes," and then confidence will collapse. I know this is uncomfortable to hear, but if you're relying on a pension fund for your future, you need to listen carefully. Most pension funds hold 3 core assets: stocks, bonds, real estate. All 3 are in historic bubbles, and all 3 are dependent on low interest rates and rising debt to stay inflated. But when the implosion comes, and it will, these assets will not just correct, they will crash. That means pension funds will not generate the returns they've promised. And when that happens, it won't be the managers who suffer, it will be the retirees. Millions of people will realize the money they thought was waiting for them doesn't exist. If you're worried about government debt, wait until you understand derivatives. Officially, global derivatives are estimated at 600 trillion. Unofficially, according to some insiders, that number may exceed $1 quadrillion. Let me explain what this means. Derivatives are bets, financial contracts stacked on top of other contracts. They work beautifully as long as no one loses, but when counterparty risk shows up, when someone can't pay, the whole system unravels. Imagine a casino where every gambler is leveraged on 100.1 and the house is underfunded. That's the global financial system today. The moment asset prices fall sharply, many of these derivative contracts will become worthless, and no one will be standing on the other side to pay. The central banks will have 2 options: let the system collapse, print trillions to cover the hole. Either way, you pay. People still believe that central banks are protecting them, but in reality, central banks are the arsonists pretending to be firefighters. In a real free market, when debt levels rise too high, interest rates go up automatically. That mechanism no longer exists. Instead, governments and central banks print money, suppress interest rates, and manipulate bond markets to keep the illusion going. This isn't capitalism, it's monetary socialism. And let me be clear, I believe central banks should not exist. They distort every natural law of economics. They reward failure, punish savers, and artificially inflate assets. The result, a system so fragile it can no longer survive a shock. That's where we are today. Not at the start of a crisis, but at the end of a global credit supercycle. You might think that Switzerland, with its reputation for prudence, would avoid all this. Sadly, even here, the disease has spread. The Swiss National Bank, once a pillar of conservative finance, is now acting like a global hedge fund. It creates money out of thin air and uses it to buy US tech stocks, including Apple and Microsoft. Its balance sheet has ballooned to over 120% of Swiss GDP. That is not monetary policy. That is speculation on a national scale. And the average Swiss citizen has no idea that their currency is being sacrificed to support the euro. We're selling our sovereignty in exchange for short-term trade advantages. That is not the Switzerland I knew. For 99% of people, gold means nothing. They don't own it, they don't understand it, and most governments would prefer it stays that way. Why? Because gold exposes the fraud of paper money. Since 1971, when the US closed the gold window, all major currencies have lost 97% to 99% of their value against gold. Let me say that again. The euro, the dollar, the pound, the yen, they've all been devalued quietly, year after year. Meanwhile, gold has held its purchasing power for 5,000 years. That's why gold is not an investment. It's money, it's insurance, it's a firewall against the collapse of trust. We don't buy gold to get rich. We buy gold so we don't become poor when everything else crashes. What comes next is difficult to predict in detail, but easy to understand in principle. We will likely see a strange phenomenon, a hyperinflationary depression. That sounds contradictory, but it's not. Here's how it works. Asset prices, stocks, bonds, real estate, collapse, deflation, consumer goods, food, energy become unaffordable, inflation, currencies lose value rapidly, hyperinflation. You will see a world where your house is worth half as much, but your groceries cost twice as much, where your bonds are worthless, but gasoline is a luxury, where your salary can't keep up and your pension is gone. This is not science fiction. It has happened dozens of times in history, and the signs are everywhere if you're willing to look. So what can you do to protect yourself? First, understand that hope is not a strategy. The system will not fix itself. Governments will not save you. Most people will wake up too late. They will lose decades of savings in months. That's why you must act before the panic begins. Move a portion of your wealth outside the banking system. Hold physical gold in safe jurisdictions like Switzerland. Work with professionals who understand offshore structures, capital controls, and banking law. I've helped clients from over 80 countries build real protection, not headlines, not opinions, but legal, discreet, bulletproof strategies. Because in times of chaos, it's not about making money. It's about not losing everything. This is not the end of the world, but it is the end of a cycle. The greatest transfer of wealth in modern history has already begun. Some will lose everything, others will protect what they've built and position themselves for what comes next. Which side are you on? Your assets deserve more than hope. They deserve a fortress.